All right, Devin Choksey joins us now. Devin, you're running late. Was it because of the match? अरे आप भी yellow पहन कर आए हो? Everybody's a CSK fan here. I thought you from Gujarat.
Yes, Nikunj, I think we were waiting for CSK to blast yesterday. I think it didn't happen actually. So,
So nobody supports Gujarat, is it?
no, I do support Gujarat and we enjoyed the batting of Gujarat. So certainly I think it was a great match yesterday.
So I will only buy Gujarat stocks. I will not support the Gujarat team, right? Right? Okay, let's start markets, Devin. Do you think we're on course to make a new high and stay above that new high?
Well, I think the fabric is set as I see it. On one side, the corporate results have come up very well. The guidance for the current year, I think, is reasonably good, even except the commodity segment where the certainty is not around. But a good news for the consumption of commodity is very high because the cost of commodity remains lower, both industrial commodity as well as the food grade commodities. In such situation, we are likely to see relatively better margin performance from the companies which are consuming commodities. And that would include the likes of autos, the auto ancillaries, even FMCG companies, and so on and so forth. But it may not be so great news for the commodity producers per se. However, I think they may probably stabilize on the margin front maybe after a quarter or two. So I would think that current financial year looks, I think, reasonably set for growth, including the IT, which was a suspect at the end of the last quarter of the last financial year. I think the IT is showing the distinct signs of growing and growth. I think both. I think they are likely to record. So there also we remain reasonably more confident. And the banking credit is also reasonably good, I think, as far as the corporate side is concerned, housing finance side is concerned, and the retail side is concerned. So overall, if you look at the sectors, I think more or less both all the sectors are showing the signs of growth, and that's why I said the fabric is set. Fortunately, I think the global funds have also started coming into the market, and that is keeping the market stable at this point of time. So maybe if market runs up ahead of time, then you might see corrections of some degree. But otherwise, I think we should see the gradual upside in the market going forward.
Right. Devin, the one space which is really springing up is the entire realty pack. We had Chris Wood as well on, in the office on Sunday evening talking about how he's extremely bullish on realty. And I just want to take a leaf from what Shobha delivered. FY24 pre-sales growth, they've given a guidance of a solid 15 to 20%. Fair amount of buoyancy as well within the entire realty pack. Any stocks that you like here to buy afresh right now?
Good morning, Ash. Well, I think most of the companies are showing reasonably good size of the projects and the execution thereafter. Fortunately, I think the inventories are not remaining with the companies for a longer period of time. Moment they see the tractions, I think they are already having seen the bookings are completed for many of the companies. At least I think in the metros, we are experiencing this trend. So where the affordable housing business is there in the smaller cities, there too one is experiencing the higher amount of bookings coming from the customers. And that is getting validated also from the housing finance companies which are growing the loan book by about 20% or so. So overall, housing finance as housing sector as a space, and I think housing finance along with, they remain reasonably good on the track as far as the growth is concerned. Now, whether one would buy any of these companies immediately, my preference has always remained with housing finance companies, largely because of the fact that if one has to grow steadily in his investment, then probably 20% rate of kind of stagger growth, which is promised by the housing finance companies, is reasonably good compared to the real estate companies per se, who may have their ups and downs in the respective quarters, and so would be the impact on the prices. So we remain reasonably more overweight on the housing finance space within the real estate sector.
Can we not take his opinion on Reliance? Devin, what to your mind is going to snap Reliance's underperformance?
Well, I think largely the market has been experiencing the participation in last 1 and 2 months from the foreign investors, and that has probably gone into the side stocks more than getting into the mainline stocks. My reading said that the fundamentals of the company remains absolutely strong and very convincing. The consumer businesses like Geo and the retail, Both of them are growing at a steady pace of growth, and which is fundamentally very good because those businesses, when they start moving at an exponential pace, then probably I think you might see a situation of some kind of degrowth in subsequent period. But I think here the company is growing very steadily at around 15 to 20% growth in the respective space, retail and the geo. So I find that I think it's a very steady growth continuing. At the same time, with the 5G rollout and the wireline connectivity improving for Geo, I would think that I think the higher amount of business is expected to come up in the coming quarters and so forth. So I remain positive about the consumer-facing business, and at the same time, the industrial business, both refining and petrochemical, they again I think grow at a steady pace of growth. They have taken the full advantage of the lower crude oil prices last year, and they continue to do so even in the current year. I believe that I think company would continue to produce relatively steady set of growth. Maybe 23, 24, you are also going to see some amount of progress on the renewable segment of business, where the company has started showing some amount of progress on the implementation side. I would think that I think somewhere in the end of the financial year, we will be seeing some higher amount of things coming in. Something ahead of that, maybe I think you should see the actions happening in the market and the accumulations also happening in the portfolios.
And go back to Tata Steel, and it's gone below the 200 DMA. Tata Power, sorry, it's gone above the 200 DMA. Deven, why are steel stocks doing reasonably well? I mean, the demand for steel is not that strong. I mean, we know that China is no longer guzzling. We know that they have a surplus capacity. We know that Russian steel is back in the market. Yet, a stock like Tata Steel actually has done rather well for itself.
Nitin, my understanding is that India is an economy which is basically spending heavily on building the infrastructure, and that's a roadmap that the government has set for 10 years. So obvious it is that I think in current scenario, the metal consumption would India specific metal consumption I think would remain higher. Be it construction activity, be it infrastructure activity, be it consumer products activity. Everywhere, I think the metal requirement would be on a higher side, and the steel would be definitely, I think, in a higher demand going forward as well. However, I think the influence of the China steel prices definitely, I think, keeps everything under control. And in between, in the last year, we also saw some very ugly surprises on the fuel prices, energy prices. As a result of which, I think the margins and everything also had come under pressure. But I would think the demand scenario would remain intact. I would see if the crude oil prices remain stable, then the margin scenario also should remain intact. And India-specific demand scenario would continue to grow well, as my reading says. So maybe I'm not a very big fan of buying commodities because commodity assumes I think bigger amount of cycles. But I feel that I think on a given opportunity, corrected prices, I think if the stocks are available in the course of its state journey, probably I think one could buy them at lows.
Another stock which I think is worth revisiting, Deven, is ICICI Prudential. Now that ICICI Bank has got permission to increase their stake in ICICI Prudential, I mean, this is a couple of years ago, they had to sell their stake, ICICI Lombard, I beg your pardon. ICICI Lombard, they had to sell their stake in ICICI Lombard because they needed capital to run their banking business. Now, they've got permission to increase their stake back in ICICI Lombard, albeit at a higher price, but that is something which would help the stock.
Yeah, I think on the fundamental side of the company, if I look at it, in each of the product vertical in which they are operating, probably I find their strategy quite unique in the non-life insurance space. And that's where I believe that I think this company is having a relatively, I think, sharper edge compared to others in the non-life particularly. You look at, I think, other products, including, I think, the products which are facing consumers, including the motor vehicle loans. I think the strategy that the company has adopted is suggesting that they are physically hitting the sustainable growth path. And that's where I believe that this company remains relatively more strong. So I find fundamental strength in this company quite high. Maybe I think this particular transaction of increasing the stake could possibly result into the stock price remaining firm to higher. That would be a given situation. But I see the sustainability of the business as quite high in this company.
Right. Okay. ICICI.
Why am I going back to Infosys? Guys, it's trading at 18 times. 18 times trailing with a 3% dividend yield. Is the margin of safety now strong in buying into a stock like Infosys? Deven Choksey, 12% down this year. The guidance was not great. But is the margin of safety strong if you buy Infosys at about 20 times?
Absolutely, I think no doubt in my mind. I think, in fact, when the stock price hit low at that time, also I said it's a contrarian buy in this particular company, largely because of the fact that if one is talking about significant amount of proliferation of the cloud computing, machine learning, and artificial intelligence kind of a programs, I would think that the companies like Infosys, TCS would definitely get significantly large amount of orders from the global market. Maybe in a given situation when the global economy is hitting rough patch in form of some recessionary conditions over there, they may have slightly muted progress on that front. But otherwise, I think they would continue to do well. Given that kind of a strong positioning that these companies are enjoying, I would think that any corrective downside in the stock prices are definitely welcome. And I think that is what we got in the month of February, March this year. I would think that even at current price, as you rightly said, I think the valuation wise, the stock is compelling. Downside risk is protected, margin of safety remains on a higher side. And at the same time, whatever the directions of guidance that they have given, I believe that by the end of the year, I think they would be probably surprising and give relatively better guidance going forward. So I would rather like to buy at a price when it is available, which is I think quite attractive at current price.
Some of those paint companies as well, Deven in the spotlight today. JP Morgan coming out with their latest report. It's a neutral rating on Asian paints with a target price at 31.28, and some of the other paint companies as well in the spotlight. Yesterday we were interacting with the management of Indigo Paints, and they were pretty categorical that they're not worried about competition intensifying within the space and eating up their market share. Your take on this scenario?
So, Evan, growth in the industry continues. Consumer is spending money. As we talked about earlier about the housing business growing. In my viewpoint, I think with the infrastructure space continuing to grow, with the consumer continuing to spend money, the demand scenario is never in question. In fact, I think other competitors, when they entered into the market, they are unlikely to cause any kind of a margin threat to the existing companies. Companies like Asian Paint, which is well integrated with the input cost, which is I think predominant factor, they are well integrated on this particular front as well. So obviously, on one side, they have got the ability to source material at a lower price and keep their margin protected. On the other side, I think higher amount of distribution reach that they have created, that is also giving them a unique proposition. Any new company coming into this particular space, they will have to definitely beat the situation and create the space for themselves in the distribution. And at the same time, I think protecting the margin, which is quite vulnerable due to the volatility of the crude oil prices. In my viewpoint, I think the likes of Asian Paint would continue to do well in the paint business also. And also, I think the other line of activity which they have started, they're showing reasonably good amount of growth as far as I think the home decor business in which they are and they've already entered into. So from that perspective, I would remain comfortable with the likes of Asian Paint, which shows relatively steady amount of growth trajectory hereafter as well.
When Choksey, let's talk Nifty language here. Do you see Nifty touching 20,000 before the year end?
Well, I think on the fundamental strength, yes, definitely. I think it's a good possibility because in 23-24, we are likely to see the earning growth continuing in the vicinity of around 15% above. So certainly, I think that particular situation also suggests that going forward, the discounting would probably move well, and I think the Nifty could possibly move in the direction of 20,000 to 20,000 plus levels. But more importantly, Nikunj, I feel that the way in which I think we are seeing the sustainability of the earning and the growth in the earning in one after another sector, that convinces me more that I think it is a journey which is likely to continue. It's not going to be in previous years. What we have seen is that I think in one particular point of time, the Nifty would peak out and thereafter it will go on the sideways for a longer period of time. Hereafter, the conviction says that the Nifty is likely to remain on a steady wicket and I think on a sustainable basis. I would be more of the view that 23-24, of course, but 24-25 also remains, I think, reasonably promising, given the kind of growth program that we are experiencing from different industries, companies in specific.
It's a 9 on 10 chance that Nifty will touch 20,000 before the year end. Naresh feels it's 8 on 10 chance that Nifty will turn 10, 20,000 before the year ends. And Deven Choksey, what should be your number? 6.5, 7.5, 8.5 or 11 out of 10?
Well, I think whether it happens before the end of the year, calendar year, or
Give me a
maybe
number.
it is happening
Give me a number.
by
Give me a
March.
number. We all are number guys. Give me a number. No, what's your gut call? I mean, I'm not going to hold it against you. On a scale of 1 to 10, based on your understanding of the market, Deven bhai, do you think Nifty will touch 20,000?
I think it is definitely above it for sure.
I got bullish consensus going. 20,000, here we come. Which is one.
Thanks so much for joining in and sharing with us your fundamental outlook on the markets. Let's get in those mid-cap strategies.